Welcome in. Today I'm revealing the fourth stock I'm buying for our portfolio, and I'm showing you my projection of what the potential future upside is. Today's stock is not very well known, so I hope you appreciate the video on this one. If you're new to the channel and wondering why it's different to other investing channels, then check out our introduction video. The link is up here and in the description. Now let's dive in. The new stock I'm adding to the portfolio is VITL Farms, ticker VITL. It is an American egg and butter brand founded by Matt O'Hayer in 2007. It is a public benefit corporation headquartered in Austin, Texas. The company emphasizes ethical sourcing, environmental sustainability, and animal welfare. VITL Farms partners with a network of more than 425 family-owned farms across the United States. The chickens are pasture-raised, which means that they are outside and have much more space than battery or free-range chickens. Also, the family farms don't use pesticides and herbicides, and they use pasture rotation. All good stuff for the health of the land. And if you already like the company now, then wait until you see the possible upside potential for the stock. Now I believe that for long-term investors, it is essential to know what you own and why you own it. And that to me means that I've done a long-term earnings and stock price projection. As long as the thesis stays intact, it gives me confidence to buy the dips and let the stock compound in my portfolio. In this case, the projection I've prepared for you will clearly show why I'm adding VITL Farms to the portfolio. VITL Farms is another one of those companies that have the guts to publish their long-term targets. I love companies that do that. This info is straight from their own website. On their investor day on the 16th of December, so still very recent, the CEO stated that their 2030 revenue target is $2 billion. On their way there, they expect to pass $1 billion in revenue in 2027. He added to that a target of 15 to 17% for adjusted EBITDA margin. Now, of course, we want to estimate their 2030 net margin, so we can get to a net income per share for 2030. So let's look at their numbers in more detail to see if we can make a sensible projection. Let's start with their revenue. It's trending up nicely. They are at about 700 million of trailing 12-month revenue now. The statement below the graph is from their latest Q3 earnings. Looking at the growth percentages, most likely they will hit 1 billion in revenue in early 2027, so well within the target date. And if they can keep up a close to 30% year-over-year revenue growth, then they will hit their 2 billion target in 2030. So I understand their revenue targets now, and I have no reason to doubt them. Continuing to margins. Here you see their adjusted EBITDA margin, gross margin, operating margin and net margin all in the same graph. You see the same dip in all of them in 2021 and 2, and after that they all trended back in the right direction. So what happened in 2021? Well, it was a combination of two things. The first one was inflation. That pushed their input costs way up. And like with a lot of companies, they were not immediately able to hike their own prices to offset those higher input costs. That led to margin compression. The second thing was that they were investing heavily into new production lines and facilities at the time. So that was also a temporary phase. And that is why in the years after that you saw their margins pick back up again quickly. Their investment led to revenue growth, as you saw in the earlier chart. And so they have increased scale, and that is why their margins have now climbed past the levels from before the dip. I think this all looks very logical and healthy. Their adjusted EBITDA margin is now at 13.8% in the latest quarter. Their target for 2030 was 15 to 17%, so a further increase of 1.2 to 3.2% from here. Their net income margin in the lower graph is now at 8.3%. It's logical to assume that net margins rise along with their adjusted EBITDA margins. So I will create two scenarios for 2030. A base case with 1.2% net margin increase to 9.5%, and a bull case where I won't take the 3.2% increase because I think that's too much to ask, but I will assume a 2.7% increase to 12% net margin. So taking those 9.5% and 12%, I get to 190 million of net income for the base case and 240 million of net income for the bull case. Now let's divide that by outstanding shares to get to EPS. The company has been diluting by about 2.5% annually, as you can see in the table. So let's assume that continues. That would give us about 52 million shares outstanding in 2030. That means $3.65 of EPS in the base case and $4.62 in the bull case in 2030. Now we have to assume a 2030 PE multiple. I will assume an EPS growth rate after 2030 of 20% for the base case and 25% for the bull case. Taking a 1.2 PEG ratio on those, that leads to a 24 to a 30 PE multiple in 2030. That seems very reasonable, and as you can see in the chart of their historic PE, that is also about in line with where the stock has traded the last year. That leads to a base case stock price estimate of about $88 and a bull case estimate of about $139 in 2030. Now I hope you've started watching this video without knowing where the stock price is today. The stock price today has sold off from $50 to around $30 the last months. So that means that in my opinion a 3x to even a 4.5x in 2030 is possible. Very good upside potential here. So why has the stock sold off the last months? It was due to a slightly lowered revenue forecast for 2025. As the article says, it's likely to be a temporary setback and that the long-term goals remain intact. So if the market wants to reduce the stock price from $50 to $30, a 40% decline because of this short-term setback, then in my opinion it's a great time to pick up shares. As you can see in the chart, the price is now also at the support zone of around $30, where it has already bottomed out a couple of times last year. So I see this as a very good opportunity, and that is why this is the new stock I'm adding to the portfolio here, with, in my opinion, very good upside potential for the next years. So this was the video of our fourth stock pick for the portfolio, VITL Farms. Thank you for watching. It was not financial advice. I hope you liked the video. If you did, then please click the like button. Click the link to view other stocks we've bought for the portfolio. And the video of the next stock I'm buying is coming up soon, so subscribe and hit the notification bell if you're interested to see that. And by subscribing, you will also be helping the channel create more impact for nature. So thank you for that. Because good deeds compound too.